Zaggle Prepaid. The company has gone ahead and completed the acquisition of nearly 38% stake in Mobileware Tech for about 22.8 crore rupees. The investment is set to help, as per the company, strengthen their payment offerings. Avinash Godkhindi, who's the co-promoter, MD and CEO of the company, joins in now. Good afternoon, Avinash. Always a pleasure speaking with you. And that really is the first question. How does this strengthen your business capabilities, and what is the kind of incremental revenue that you foresee from this business where you've increased your acquisition or made the acquisition of about 38%?
This is a very exciting, investment for us. We get about 38.5% in Mobileware for this investment, and UPI is a platform or a capability that everybody is looking to leverage on, and Zaggle is no exception. Mobileware brings tremendous capability around a variety of NPCI technologies, including UPI. And just to give you a sense, the Brome solution that we've spoken of extensively in a lot of our conversations, which is our petty cash, utility bills, rent payments platform, is powered by Mobileware's UPI technology. So that is the level of usage that we see of this capability that we have brought on board. And also the team is a very strong team. Satyajit and Amitabh are great entrepreneurs, and that always helps when you're working with like-minded entrepreneurs who are building for the future.
Avinash, good afternoon. Thank you for joining in. What I wanted to ask you is, how much does this Brome currently contribute, as it is highlighted as the key product with strong demand, right? Now, in the next 2 to 3 years, how big a deal do you think this could become?
This could be very large, right? I mean, it's part of our Zoyer offering, which is our accounts payable platform. And this is a module which we hit upon through our conversations with our customers. Some of the biggest customers in the country and some of the global players. So anybody with a retail chain, anybody with a branch network like an NBFC, an AMC, a brokerage house, insurance companies, banks, literally anybody who has more than 20-30 outlets or stores or branches has a problem with their petty cash management, with their utility bills payments. And this solution just completely takes away the complexity around it. So in 2-3 years, we think it would be a very substantial piece of our overall revenues and profits.
All right, a substantial piece. You refrain from giving us numbers here, but let's talk about Zoyer, because this is a part of Zoyer itself. That itself has seen a contribution increasing. Where does that stand, and what's the aspirational number there?
So Zoyer today is about 30% of our overall revenues, which includes both our procure-to-pay solution as well as our Brome solution. And as we go along, we expect that to grow, and we'd probably be about 45-50% in the coming years, is what we see.
And what does that do to your margins, Avinash? Because you do have a longer-term strategy of around 15 to 16% margin targets over the next 4 years. What's the glide path here?
It's going to be probably, it's not going to be front-ended because this is a business where operating leverage kicks in, and operating leverage drives a lot of the EBITDA growth as well. We see that growth which is coming into Zoyer allows us to command a pricing premium in the market, allows us to be able to create a unique positioning for us, and that should help us scale this without additional investments, because once the software and the platform is ready, it's just about taking it to newer customers. And as the product becomes more established, we are already seeing tremendous pull. Right, so the need to be able to market it in the market doesn't really exist to that extent, because people get to know about it from word of mouth.
So at what point do you think, Avinash, that this operating margin is going to kick in? Because by when do you expect to get to that 15 to 16% margin, if you could share some color there?
So 15-16% adjusted EBITDA margin, we have already guided is about 4 years is what it would take. And operating leverage is something which doesn't kick in at a moment of time, right? It starts to show its impact over time, and we believe in the next 12 months or so, you'll start seeing the impact of that kicking in a significant way.
All right, over the next 12 months is when we'll see the impact of operating leverage, margins of 15-16% over the next 4 years. But what about revenue? Because for this year itself, you had increased the top end of your revenue guidance to about 63%. So 58 to 63% was your band. And because you had increased the top end, it appears that you will look to top that as well. So realistically, do you think you can grow more than 63% in this financial year? Is there a possibility? And do you have any early indications of what you're targeting for FY26?
There's every possibility that we will exceed the top end. That's how it's looking like right now. I don't want to say too much and spoil my own party, as they say. But it's looking very, very, very strong, and the next year is looking extremely good as well. So that's how I put it.
Could you quantify that extremely good for the next year in terms of your growth, Avinash? If you could give us a sense on some of the acquisitions that are in the pipeline as well. You said that you're looking for some of them. You are at advanced stages in a few of them as well. So what's the update there?
Those are coming through very well, and we are very focused on making sure that those acquisitions happen in a timely manner. And we are seeing those progress extremely well. And hopefully we should be able to announce something in the next 3 to 6 months, which is fairly substantial. And on the growth guidance, it's a little too early for me to quantify a number for next year, but I can safely say that it's looking very, very good.
All right, you will announce a substantial acquisition in the next 3 to 6 months. What about shareholding? I mean, the last time we spoke, the stock, which has corrected about 40% from the highs, seen some recovery from the lows as well. You guys as promoters have purchased about 3 lakh shares as well. Have you punched in some more orders for your own shares? And what about the sellers? None of the institutions are selling, but it may be some of the individuals, the HNIs, they're selling. What's your sense on all of that?
Yeah, so actually the amount that the promoter group has acquired is a lot more than the 3 lakh shares. Overall, the promoter group today holds a little over 44%, right? And the intent is over time to, keep adding a little to that. Of course, institutions have been backing us. They see the opportunity, they see the growth, they see the momentum in the business. Individuals, take their own decisions, and of course, in the institutions as well. But I think overall, we've seen great support from the institutional side.
Okay, individuals have been making their own decisions. We've seen some of that as well. But since your stake has increased to 44%, where do you want that number to be from an aspirational standpoint? Do you target 51%?
Aspirational, yes. Wouldn't want to bind myself by putting it with a time frame, etc. But aspirational, yes. Both Dr. Raj and I are, very bullish about the company's prospects. We are, we bleed red. This is something that we are truly believing in it till the last breath, as they say. So our conviction is extremely high, and we'll always be buyers of the Zaggle stock, as they say.
All right, Avinash, thank you so much for sparing time and joining us today. Wish you good luck for the road ahead and for FY26 as well. The management there of Zaggle, very confident of exceeding the higher end of its 58 to 60% growth guidance, and also looks to announce a substantial acquisition in the next 6 months.